Hello, welcome to the European Open Briefing for Friday, January the 20th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So the main headlines this morning is we had another speech by Fed Chair Janet Yellen late last night in the US and early this morning in the rest of the world. Yellen took a more cautious tone in her speech, and it follows actually a slightly more hawkish one a couple of days ago. So we saw the dollar fall back a little bit after yesterday's highs above 115 yen. But of course, we also have Donald Trump's inauguration today, where he's set to take office following his election way back in November. And that anxiety surrounding Trump's presidency is also dampening demand a little bit for the US currency. We saw some fluctuations in the euro. It fell sharply yesterday after Draghi made some dovish remarks at the press conference following the ECB's policy meeting. And in other news, the Australian dollar rose to another 2-month high against the greenback following some positive GDP data out of China. So let's begin with the dollar-yen pair. We can see it's been climbing for the past couple of days. Yesterday it hit a peak of 115.61 yen following some strong data out of the US. We saw weekly jobless claims drop to a near 43-year low in the week ending January 13th, pointing to a strong US labor market. We also had some positive housing data as well, but then we had that speech by Janet Yellen. She was speaking in California, where she was not as hawkish as she was early in the week. She said it would be prudent to adjust the stance of monetary policy gradually over time, although at the same time she did say that it would be risky and unwise to keep rates too low for too long, although markets considered her speech more dovish overall, so that led to the dollar falling below the 115 yen level. Let's move on to the euro now. We can see those fluctuations yesterday. We had that sharp drop after Draghi started speaking in his press conference. It did rebound afterwards, most mainly because the dollar fell back, and I guess also as the Draghi effect wore off. So the euro is back above the 1.06 level after brief spike downwards. It actually came close to rising above the $1.07 level. Draghi yesterday said in his press conference that he's not yet convinced that the recent rise in the headline inflation rate is sustainable, and wants to wait and see for second round effects so that it feeds through into the core inflation rate before being sure that the Eurozone inflation is on a sustained path upwards. And Draghi also repeated the fact that the Governing Council stand ready to ease again if the outlook deteriorated, and he also confirmed that they did not discuss tapering at yesterday's meeting. Let's have a look at the Chinese data now. We had the China GDP data for the fourth quarter. GDP came in at 6.8% year on year. It was slightly above expectations of 6.7%. Growth was mostly led by consumption and government spending. The overall growth rate for 2016, though, was 6.7%, and that's the slowest in 26 years. And again, it highlights the challenges that the Chinese economy faces. We also had the monthly investment, industrial output, and retail sales numbers. The retail sales was the only one which beat expectations, coming in at 10.9%. The industrial output was slightly weaker than expected at 6%, while urban investment was 8.1%. And looking ahead into 2017, there are concerns about the rising debt levels. We're seeing a cooling of the housing market, and of course now we have the possibility of a trade war with the United States, and all of these could pose downside risk to the Chinese economy going into 2017. Though the Chinese data did provide a boost for the Australian dollar, which hit a 2-month high of 0.7587. It since is back a little bit to around 0.7550. In other commodity currencies, the New Zealand dollar also reached fresh highs early this morning before falling back a little bit, while the Canadian dollar yesterday it actually dropped to a 2-week low of 1.3352 per US dollar. It's now steady around 1.33. The oil prices, on the other hand, we did see a very modest dip yesterday after US crude stocks showed a surprise increase in inventories. And usually that leads to big fluctuations in crude oil prices. So they were fairly stable after that data, and that's mainly due to on signs that the oil market is perhaps now starting to tighten following those production cuts by OPEC and non-OPEC countries which is being implemented starting in January. So US crude is currently trading around $51.70 per barrel. Let's have a quick look now at the pound and gold before we go. Just to mention that the pound is not doing too badly. It's holding comfortably above $1.23. We had that second speech by UK Prime Minister Theresa May yesterday. She was speaking in Davos, where she was keen to reassure that the UK will try to become a more global economy, and that businesses should not be worried about the UK isolating itself from the world after Brexit. And of course we also have the weaker dollar today, so that's supporting the pound. Gold, on the other hand, it has dropped back a little bit this morning, although we should see it hold steady around the $1,200 level, as there's likely to be some safe haven demand ahead of Trump's inauguration. Investors will be keen to watch out for any further details about his policies in his inauguration speech, and that inauguration ceremony will begin at 14:30 GMT today. Looking at the economic calendar, we did have German producer prices, which were in line with expectations. We've got UK retail sales coming up later in the day. And then in the North American session, the main data will be Canadian inflation and retail sales numbers. And of course, we don't have any US data today, given that it is Donald Trump's, the president's inauguration day. That's it from me. Thank you very much for watching, and have a great day.